Okay, sorry about that. Ladies and gentlemen, welcome to the Big Tech Frenzy. That was a little bit confusing. I thought I was muted on two different sides there, but we figured it out. Okay. Um, Hopefully everyone is doing well. Welcome, everyone. What is everyone buying? Few funds left. Here's the thing. I have adjusted my portfolio a little bit. I'm buying new things these days. One of them actually was today, buying Nebius. Nebius, I feel like I'm not actually seeing any real concerns to their business. So if there's an opportunity for me to, catch this company on a dip while some AI concerns start to appear, that's the most amazing thing about long-term investing is sentiment can change and people can trade in and out of names. But if you're looking to acquire a long-term position in something, maybe even like Oracle, I mean, I'm not personally buying Oracle, but if you have long-term belief in this name, I mean, you got to look at the price of this stock, even, year to date, we're up 10%. This stock has gone from 166 at the beginning of the year down to 118, up to 345, back down to 186. Like the volatility in some of these names is insane and allows you to, if you're smart enough to sort of be patient during a lot of the volatility, to acquire amazing pricing in names that you believe in. Now, Oracle is not one of those names for me personally. But, I really like Amazon here. I feel like I'm getting a nice dip purchase on Amazon. They haven't really moved at all in the last year, down 3%. Meanwhile, during those 4 quarters, they've built up, continuous, more cloud customers, a larger space in the e-commerce business. They are spending a ton, which is what people don't like, but it actually strengthens their position. So that's one of the things that I'm a little bit confused on with this AI spend is they're at full capacity. There might be one day where, we end up buying too many GPUs and there's not any customers for those GPUs, but we have not found that spot yet. So anything outside of that right now is just pure speculation. There's multi-year build outs right now for continuous GPUs. The way that Amazon's going about it is they don't set up more capacity until they have a customer that's going to fulfill it. They are the longest living cloud company. They are the original, okay? And one of the things that I love about this is they are going to see a massive increase in cloud customers just as more things come online, more AI spend, all of this sort of stuff. But then also a lot of that's going to translate from, the benefits that we see in AI to benefit down to, how's the logistics? How is figuring out last mile delivery? Is that going to be full self-driving? Are there going to be robots that help with the packaging? There already is over 1 million robots working at Amazon. So is it an opportune time that after last earnings, which was a blowout quarter, stock ended up raising up super high, and then the market sentiment, not the real numbers, but sentiment, ended up bringing it right back down to prices below where we were before earnings. How does that as a long-term holder make me feel? So I feel very confident buying names like Amazon, Nvidia, and it's funny, right? You can have companies selling off because they're spending too much on artificial intelligence. So people are hoping, hey, you know what? We'll buy or we'll continue to buy if you stop the spend. But yet Nvidia is up. Now it's only $177. It's a $4.3 trillion business. It was $700 billion more. Okay. That's like 1.5 oracles that they've lost over the last little bit since the last GTC, since the real conversation from Jensen Huang saying that they're going to have 500 billion. And then they've only clarified that to the upside. But the numbers are so big that people just can't even wrap their heads around them, so they're not believing them. They came out and said the Humane deal, XAI, the Chinese spend, if there is any, supposedly there is. Internal rumors are saying they're trying to ramp up the production of H200s, then you see other reports saying that China's not wanting them, or that there's these sort of rules and regulations for when you can use Nvidia and when you can't. But yeah, it's just a little funny. It's so unbelievably mixed in terms of how people are feeling about artificial intelligence. I think a little bit, actually, if you guys listened to the All In podcast yesterday, was a little bit bearish on this topic because, you know, there was some talk about, yes, AI is sort of in that utility phase, and we're going to actually see a lot of the real spend, but people are realizing that this is not going to cure cancer next year. And Chamath sort of highlighted this, that there's been some claims of AGI coming as early as 2025 or 2026, and now that's not, probably clearly going to happen. So, there is some pushback in expectations, and that's trimming off some multiples. But the real utilization of this product is being created right now. Real revenue making or revenue producing products, like probably Meta is the one that I think is the most clear example, even though they get sold off due to their spend because there's not a line item for artificial intelligence revenue. There's no cloud services. So it's hard to see, okay, where does the spend go and how does that translate into real dollars? So, the name gets sold off. But that AI spend is what's allowing them to continuously grow their advertising business. That advertising business is by far their largest segment of their overall business. We have the family of apps revenue, and then other apps, other revenue, and then sort of Meta Labs. And then on the sort of Meta Labs side, on their far moonshot bets, you've even seen some spend get pulled back from that 30% reduction in spend for the metaverse. Okay, so they're tightening, but they're not stopping spending on artificial intelligence. Why is that? Well, because it's working, right? If you can see higher conversions or generative AI advertising or something like this for Meta, and that ends up leading to more customers paying on their platform or staying on there for longer because the algorithm is a little bit better and serving them, the right shorts or the right posts that are going to keep them on the platform, which even allows them to stay longer to watch the next higher converting ad. I don't know. That sounds like a recipe that works for me. And you could see that not just in my own sentiment here, but in the actual financials. But people are saying, they're kind of separating the two. Where is the capital expenditures? And then separately and completely not connected is their revenue and their profits. But that's not true. They're all connected. And it's the spend that will enable the revenue and net income to climb higher. Okay. That 711 wick top on Meta from Friday. Yeah. Yeah, quite the spike, but it's definitely not the high of the company. We've seen 796 here. So there's been a massive sell-off, and I'm buying these names. And one of the things that I love about buying big tech, especially, so I risk repeating myself, but it's so important, okay? And it actually goes a little bit anti my own portfolio. So I think that Nvidia is a great play. That's my own personal opinion. But I could make a case to say that they do not have as much flexibility and they are beholden to their largest customers, right? Everyone knows this. But a name like Meta, Amazon, Google, and a bunch of these other names where I think that they own the customer, Reddit as well is another one that I've been buying, that own their customer, can decide whether or not they say, hey, you know what? The spend is enough. And they can stop their spend on GPUs and it won't change their core business, right? Google will just continue to offer their current AI mode, and they can buy more chips as they please from whichever provider that they need in order to, match the amount of demand that they end up seeing. And I think that they are doing that. The market might be a little bit confused on that if they think, they're buying for future demand that they can't actually see the roadmap to get to. I think that sort of spawned from OpenAI's $1.5 trillion worth of spend that's now, sort of rippled throughout the market of, okay, how many other companies are sort of taking this approach of looking far ahead and signing contracts for things that they can't really have good visualization on. But for Meta, for Reddit, for Google, for Amazon, they're only spending right now while they have the capacity to do so. The day that they don't want to, contracts get canceled. Even the ones where they've already placed it inside of as sort of billings, to these customers. Here's our long-term performance or long-term contracts of us buying your chips. Well, you can rip up a contract. You might have to pay a fee in order to cancel those orders, but I promise you that can be done. And for the customer, or for the companies that own those customers, the Meta, the Googles, the Amazons, all of these, etc., where people are going on their own free will to those websites, they are the best, placed names right now. And so I find you can buy these names. They're on discounts. Like, people are selling these names off. Amazon, Meta, all these names. And they're selling these names off. And even in a recession, okay, even in extremely bad times, the amount of flexibility and pricing power that these big tech names have blows me away. So they can do both. They can be value plays where they focus on, sort of toning down the amount of gas that they're putting into the engine. They can slow things down if they want and just focus on earnings per share, or they can ramp things up, go full growth mode, which is where I think the market is right now. And maybe people are worried about seeing the actual return on investment on that, but that's their flexibility. They can do that. The companies that have to be worried about that might be the Nebiuses, the Coreweaves, the IRENs, and stuff like this that do not own the customer and are sort of beholden to what big tech, like whether or not they get these hyperscalers to sign big deals with them. So there could be risks there, and you're definitely seeing in the markets that some of those names are actually taking much larger hits than big tech. You see Nebius down 6.5%, and I'm talking out of both sides of my mouth because I continue to buy this name. What's going on with Broadcom? I just saw a couple comments there. Yeah, Broadcom, holy crap. Look at this sell-off from 415 nearly down to 340. That is just incredible. 16% off of earnings. That said, we look to IREN down 10%, Coreweave down 6%. And in fact, if we take a look at what's working and what's not, you've got White Fiber, CleanSpark, Applied Digital, Cipher Mining. Like, these are all some of the biggest losers of the day. Bitmine, BMNR, a little bit of a different topic, but still down 10.4% after announcing their new holdings today. Actually wasn't terrible of a read. They didn't add any cash. They slowed down their amount of dilution. Yeah, we'll see. Down 10.4%. TeraWolf down 10%. IREN, even Circle sort of falls into that. If you don't own the customer, you don't have a lot of pricing power, where the names like Coinbase that actually does own Circle and owns the customer has so much flexibility here. I'm actually thinking about starting a position in Coinbase. I got to be honest with you guys. I did a ranking of fintech names over the weekend with Roy Crossroads. One of the greatest guys in the space, by the way. And I know that it wasn't everyone's fancy to just go through and talk about fintech names, but for me, it was like one of my favorite live streams to do because I just love nerding out on some of these names. But Coinbase, the more and more I ended up talking about it, I think them entering into prediction markets and tokenized equities here on Wednesday, which we'll be live for to see that presentation. But that's the sort of leaked announcement of what they're going to be getting into. I'm pretty freaking excited about that. They also own a massive stake and revenue share for Circle, so they sort of benefit from that. They own their own customers. They own practically the entire back end for institutional crypto. JP Morgan today started talking about launching their JPMD, which is their JP Morgan coin for money market funds and many other projects that they're going to be working on. offering institutions 24/7 instant settlement and stuff like this. It was built on not just Ethereum, but Base, which is Coinbase's L2, which is probably the most successful L2 that's ever been created. And it wasn't created all that long ago compared to some of these other names, right? So they have all these really, really interesting spaces that Coinbase can go and enter, especially if you're a believer in cryptocurrency long term. You don't have to be a believer just in Ethereum or Bitcoin today. But the interesting part, think about this. If we're to zoom back, right, and you say, like ETH here, how can you hold this long term if all it does is just fluctuate in this range? But the volume is the interesting part, and Coinbase benefits from the volume. So they care less. Now they have they do have actual like Bitcoin and Ethereum, like they do buy and hold those coins. So they do play a little bit in the treasury space, very, very small compared to, the BMNRs and stuff like this. But if you go and buy Ethereum and you're playing and you're buying and selling and buying and selling and buying and selling, what happens to Coinbase is they're making real profits, right? They're taking that toll road revenue and putting it in their pocket each time that someone wants to play the Ethereum game, play the Bitcoin game, or pick your token, right? Some people debate, BMNR. Okay, who's going to win? Is it going to be Solana? Is it going to be Ethereum? What if I'm in the wrong name? What if Tempo or ARC or any of these ones end up taking off for stablecoin volumes? Coinbase doesn't care. They get to be flexible. They own the customer. They own the institutional customer, right? So I've been looking at Coinbase, and then the interesting part about Coinbase is the volatility itself. So while they make real profits and diversifying those profits, mind you, not even just across different asset classes or different assets, I should say. It's not many different asset classes. It's mainly Bitcoin or Ethereum. It's all crypto, but different coins. And then once we get into equities, that will be built on crypto, but that will be a different asset class. Once we get into payments, Coinbase Pay and all this sort of stuff, Base Pay, that's another, form of diversification. Another form of diversification for Coinbase, which is really interesting, is geographical diversification. Their percentage of revenue that is outside of the United States grows each and every quarter. So if you look at which one's growing faster, international's usually growing faster than what they're growing in the United States. Could be interesting. I've not taken a position just yet. Okay. Another problem is where do you enter, right? It's a 72 billion yesterday. It's now $68 billion company. I've seen this company at, the $400 ranges years ago, 2021. Then I saw it at $30 ranges, and I was an idiot not to buy here. My problem is that there's been times in Coinbase's life where they have not been the fastest mover, and there were names. So people can laugh at the FTX move and everything like this, but at the time, investors believed that the regulators were doing their jobs and that they knew whether or not FTX had money or not. And they were moving a lot faster than Coinbase. So there were concerns and real ones that FTX was taking market share away from Coinbase, which I think we were seeing. But Coinbase now obviously taking the harder path, the harder path meaning the one that's actually following the rules and not being a scam. And hopefully Sam Bankman-Fried never sees a pardon and stays behind bars. But that hard road traveled is actually leading them to real success, but is still being hit with the volatility of cryptocurrency. Could be interesting. Okay. Let's go ahead and dip into some potential other news. There was the Stephen Moran conversation. I don't want to watch the full interview. If you guys have not seen it, you know, it's on CNBC. It's about 17 minutes long, but there were a couple clips that I would like to see again, and that are much quicker. I think they're about 2 or so minutes long. I think this one we're about to watch is about 3 minutes long, but it's important for the macro space that I hear from the Fed governors. Okay, let's have a listen.
Next guest issued a dissenting vote at last week's big Fed meeting, pushing for even steeper rate cuts. Joining us here at Post 9 and a CNBC exclusive is Federal Reserve Governor.
By the way, can you guys hear
Stephen
anything, or did
Governor,
I mess it up
it's great
again?
to have you back at Post 9. Welcome.
Good day. Thanks for having me back.
Let me know.
So I know you just gave this big speech at Columbia about inflation. And before we dive into that, maybe you could just explain why you dissented for even sharper rate cuts when some of your colleagues dissented because they didn't want to cut at all.
Sure. So I think that policy is too tight. I think that underlying inflation, as I just talked about at Columbia, is already running pretty close to our target, within noise of our target. And the labor market, you know, sort of showing some signs of worry. And so there's some lags between when the Fed does something and when it hits the economy. We have to make policy for a year plus out. And my worry is that if we remain too tight for too long, we're going to exert too much restriction in the labor market, and the unemployment rate will move too high.
So there's a lot there, but how about the fact that you see inflation closer to target? Because most people see inflation and they say 2.8% PCE, 3% CPI.
Yeah,
that's not target, 2%.
No, it's not 2%, and 2% is the target. And there's a lot of folks who point to measured inflation being closer to 3%. But my point is that's a vast majority of the inflation excess over target is a result of quirks of how inflation is calculated. And so there's two main things that go into that. One of them is the housing market. The way that housing inflation is measured is really, really lagging because it looks at all rents. And people usually only reset their rent when they change their lease, which means they move or they renew their lease or they're changing homes. And that means that all leases will lag current market rents. So we know there's a real lag there. And we know that market rents have been growing at about a 1% rate for a couple of years now, at least. So there's going to be a lot of downward convergence in shelter inflation. And the thing that gives me confidence in this is the period of catch up when you compare certain measures of all tenant rent to new tenant rent. Catch up is done, which means the uncertainty there is gone. The other thing that really is distorting our view of inflation is what we call imputed prices for non-market services. And so I gave one example this morning of something that's really distorting people's view of inflation, in my opinion, and that's portfolio management fees. Portfolio management fees have contributed about 1/4 point, 25 basis points, to inflation in the last year. It's big, right? That's a really substantial contribution, way in excess of its historical averages, but it's totally imputed and it's based on the stock market moving higher just because that's how BEA calculates it. But if you look at fees in the industry, everybody in the financial industry knows that fees have been in a downward trend. They've been in deflation for 20 plus years. They fell 6% last year in 2024, right? So we know that asset management fees are in trend deflation and have been for decades. And yet because of the quirks of the measurement process, it ends up being one of the biggest contributors to core inflation, the way we measure it. And to me, that just seems really wrong. We shouldn't keep rates too high. We shouldn't ask people to lose their jobs because of quirks of the statistical measurement process. That's just not how we should be setting policy.
So do you disagree with Fed Chair Powell, who said that a lot of the inflation remaining stubbornly high has been tariff induced?
Yeah, I don't see it that way. I don't see tariffs as being a major driver of inflation. And I went through this in a lot of detail in my speech this morning about why I don't see that being the case. And I've been consistent about that being the case. Now, you might think that if I don't think that tariffs are driving inflation higher, then core goods will stay high for a long period of time. And that would be a problem if I wanted to cut rates. But I see so much disinflation in the pipeline because of shelter that doesn't bother me at all.
I didn't just pound 10 pills, dude. Relax.
Reserve Governor.
It was a multivitamin, vitamin D, and B complex. Chill. Okay. Let's see. Amazon isn't executing. They need robots yesterday. No, they're doing fine. They're doing fine. Amazon's doing I don't even understand the dislike for Amazon. Obviously there is a little bit of premium to the company versus the other Mag 7s, but it's the same premium that you can find at a Walmart or a Costco, right? You're seeing that because the the belief that that company is going to be there for, years to come, many, many years, that it'll be so hard to replicate their business with the warehouses and the logistics. And Shopify tried doing it and they completely lost. Remember, they bought River 8 Systems trying to replicate what Amazon third-party sellers were doing. They couldn't do it. It was a big failure. They ended up selling that business off. I forget who the buyer was. It was a known buyer, though. I don't remember. And yeah. Why is SoFi red? You're telling... I don't know, man. I see some people who in chat that are a little bit happy that multiples are coming down. I'm happy that you guys have cash. Folks like me with less cash and more assets are not happy about this, but it happens. Sorry, the SoFi stock's not even on the screen. What am I doing? It's amateur hour. But yeah, down 3.4%, $26 a share after a third rate cut this year and multiple talks for future rate cuts. I don't know. Let's go ahead. Ken Megan on X, if you guys know this name, he's, or they are, I think it's a husband and wife duo. But they're big believers in SoFi and ended up finding two great pieces that we should share. The Consumers Advocate org has updated their list for their favorite checking accounts of 2025. SoFi is number one, Chime number two, Current, BMO, stuff like this. But SoFi, number one. Gotta love it, right? It's always the top ranking ones that are going to see the most benefits of people looking up, okay, well, what's the best checking account that I should have? Number one, best overall, boom, that's the one that I'm going to get. But that's Consumer Advocates org. It's not crazy. What about Forbes Advisor? Forbes Advisor, another one. Number one best checking account to get right now with a 9.9 rating, SoFi. Okay. They feel very confident in this name. There are some other great names on this list, but really, why go with anything else that has more potential costs in order to sign with them than it would be to just go with the best and greatest, SoFi. Yeah, so if they continue, now I do worry about what after they've updated SoFi Plus and everything. I don't know. I know there's some people that are trying to tell me how great of an offer it is. I'm not 100% a believer. Like, I thought the idea of, okay, you know what? Robinhood for $5 a month or SoFi for direct deposit only. Like, those are some good trade-offs in terms of, hey, do you want to spend some money? Do you not? You could still get the APY on SoFi for direct deposit. So that was a little bit overblown in terms of the problems with SoFi Plus, the new version, which is $10 a month. But whenever you put them side by side, for a user like me, I would have to go Robinhood. I know that's not for everyone. But yeah, we will see. I still will be buying SoFi down here because regardless of the performance of, their new SoFi Plus products, if it's not great, they can change it extremely quickly. Not every change needs to stick around. Like, that's one thing that Anthony Noto has been talking about recently is they go, oh, so you're charging, what percent for crypto? He goes 1%, but like, it doesn't mean that we need to keep it there. Like, we're going to be flexible. If it works, it works. If it doesn't, we'll change it. Like SoFi Plus, if the $10 a month works and they see a benefit for user satisfaction, more downloads and more people converting, higher revenue, higher profits, they'll keep it. If they don't, they'll change it. And it'll be very, very fast. Is it time to short Carvana? Well, I don't... why am I typing it that way? Jeez. I don't personally short, but, $100 billion company that was bankrupt a little bit ago. I don't know. That's up to you, but it's not a name that I follow. can Tom Lee come and save us? So he had some talks earlier, like on what he believes 2026 is going to look like. Obviously, 2025 is not ending the way that he hopes it does. And the back half weeks of 2020 or December of 2025 are usually the most bullish. So, it's not over yet, but the idea that we get anywhere near 10 to 12,000 on Ethereum and we're at 3,000 right now, I think people have sort of written off that potential. That being said, let's listen to Tom Lee on what he thinks this morning for stocks.
There's a lot of things to talk about with you in terms of the skepticism.
I don't believe. Now I'm always double checking myself if I enabled audio or not. I think I did actually. Oops. Let's go back.
There's a lot of things to talk about with you in terms of the skepticism now around the AI trade, skepticism around Bitcoin. Are they in fact related, do you think?
Related, but not related.
Yeah.
I think the AI trade, it's been a juggernaut, and we know that the visibility for the next few years is really good. But now investors are just trying to figure out how much to discount, what's the appropriate price to put. And that could drive some profit taking because they've done so well this year. On the crypto side, I think that there has been some concerns about, quantum. And then there was that huge deleveraging event on October 10th. But the crypto fundamental story, is exiting on a really high note this year. The U.S. government passed legislation and regulations favorable for crypto. And we know Wall Street has expressed a lot of interest in building products on the blockchain. So it's almost like they both have great visibility, but the price levels are just what's being uncertain.
I feel like what's common, though, with both of these stories, though, Tom, is investors questioning the growth, the trajectory of growth going forward for both of these stories. Not to say that things will contract, but maybe growth won't be as strong as we've seen. We've hit the peak sort of growth rates in terms of the story. The maximum bullishness happened with Bitcoin when the administration came on board and things started to sort of go Bitcoin's way. Maybe that was peak sort of trajectory higher when it comes to growth. Same thing with AI. Now it's a period where you're sort of wondering, will this actually get funded after we saw this massive expansion?
Yeah. Well, in crypto, the best years are definitely ahead because today there's only 4 million Bitcoin wallets with $10,000 in it. There's 900 million IRA and brokerage accounts globally that have $10,000. So that's 200 times larger market. With regard to AI, I do think that the business models need to evolve. You can't just charge $20 a month. Really AI agentic services but the market ends up being huge because in the US, it's really making 130 million existing workers into super workers. That's a several $1 trillion market just in the US alone. So I think there's still opportunities.
When do you think that we're getting point on that front? And I think arguably you're seeing it a little bit maybe on the margins right now. But do you see a step change 18 months out from now? Is that 5 years out from now? It's because there's also questions, by the way, about some of these services and how valuable they are to people right now. And I know some CTOs and others who are actually saying, we're actually not getting the value out of some of these products that we were hoping to.
Yeah, I think we're in what I'd call the bleeding edge phase, like where everything feels like the tech is in front of the applications. That happened in mobile, which I studied for 17 years, and in internet early days. Like when color phones first came out on mobile or even keyboards, people kind of sneered and said, who's going to be using a color screen? Mm-hmm. And remember famously what happened when the iPhone was launched and how one of the biggest competitors dismissed it and saying it's just a toy.
Right.
I think we're at that phase with AI where the capabilities will blossom and then services will follow. But that, as you know, the future happens faster than many expect.
So if the business models of these players, which people commonly call the Mag 7 in general, need to change, then what does that do to the valuation? Are we rethinking the valuation? Because, one distinct change has definitely already happened, and that is asset light to asset heavy, asset spending on assets continues, et cetera. Is that reflected already, or does there need to be further adjustment?
I believe that AI stocks, especially stocks like Nvidia, are going to actually re-rate higher. Because if Walmart and Costco trade at 37 to 45 times earnings because they're predictable, then Nvidia shouldn't be 27 times. I also think the banks are really criminally undervalued right now, like a JP Morgan, because that's becoming a technology company. And in the past, people are stuck in the head that it should trade at 1 times book or 10 times earnings. I mean, they should trade more like a tech stock. So I think tech
Do you
and
think that of
financials.
all the banks? Or do you I mean, JP Morgan in particular is invested obviously heavily in tech. But if I said JP Morgan and then I mentioned a bank 10 rungs down, would you say the same thing?
Well, it depends on how sort of evangelized a bank is towards adopting AI and being tech forward.
So, okay, on this screen right here, like is Wells Fargo on your list of tech forward banks?
It possibly. Goldman certainly is. And I think Morgan Stanley has shown a lot of evidence. So I think banks are sort of getting it, but they are really becoming technology companies.
So even at record highs.
Even at
You like
record
these
highs.
Thanks.
You know, as many technical strategists will tell you, it's actually sometimes better to buy things at all-time highs.
True.
Not always, though.
For 2026, though, you're bullish over all the markets, and it sounds like you believe in a broadening, but not necessarily a decline in the AI trade.
That's right. I mean, I think 2026 could look like this year, because this year had a bear market and then a bull market. Next year, there was 2 puts. There's the White House put still in play, and the Fed put, I think, is going to come back. People have sort of forgot, like it's been dead for 3 years. It's really going to come back in force. But it will take maybe the first half of the year to get through that, because we don't have a new Fed in the first half. So I think the first half next year could be down 10 to 15%, and then a big recovery.
The White House put is what? Further stimulus? The tax refunds that are coming? I mean, what?
Yeah, it's pro-business regulation. It's really allowing, the U.S. to step away, look at how they're trying to simplify even AI regulations and rulings. And then it's, of course, legislation passing. And then we have the midterms, which gridlock is kind of good for markets. So I think tailwinds develop in the second half.
Gridlock because you suspect that Democrats win the...
Yes, it's probably expected that they gain in the House.
And therefore, so therefore you think gridlock will be good for the
markets,
second half of the...
Yeah, I would say half of the equity investors I talk to will breathe a sigh of relief if there's gridlock.
And then one last question on Bitcoin for 2026, or crypto in general. If MSCI decides to exclude digital asset treasury companies like a strategy or yours, for instance, what happens to sentiment? What happens to this trade?
Well, MSCI is important because other indices follow suit. MicroStrategy is building a digital credit company, so I think investors will still support their efforts. But of course, I think they can be very persuasive. But the DAT world has many companies. A company like Bitmine is already becoming more of a bridge to Wall Street and investing in DeFi. So it's becoming more of a financial infrastructure company. I think DATs are going to be more of a generic word like REITs next year.
So it doesn't matter, is what you're saying. The MSCI decision.
It's right. And right now, the only MSCI sort of dependent company is MicroStrategy, because everyone else is not even in an MSCI index.
What an interesting thing to say, that DATs are going to be similar to REITs. That's pretty interesting. I mean, hey, you're just accumulating something that makes you money over time, and in a way also secures the network. That's pretty cool. Now, in terms of a lot of people that are saying, Tom Lee is a scam artist and stuff like this, I don't necessarily agree with that type of sentiment. Obviously, you guys can have your own opinions. I think that he was really wrong on his pricing. And by the way, this is not the first time he's been wrong on his pricing. I think 2021 or 2022, he also called for an insane price on Bitcoin that didn't end up showing up. This is the problem and why I focus fundamentally on businesses and fundamentally on BM&R as well. I mean, you can be as fundamental about it as possible. Okay, obviously it's not the same as a revenue, net income flowing down to cash flow. Like, let's try to figure out what the actual business is doing. But BM&R is acquiring something that does have network effects on it. There are people that use and people that are not using Ethereum, or they have competitors, and that amount of utilization of Ethereum actually drives real use cases. Look at Polymarket, right? This is probably the most useful case of why crypto exists, is prediction markets. Kalshi's partnering with every single business that there is, allowing people to make very clear predictions on the future. That's built on crypto. But stablecoins are growing as well too. We're about to pass $400 billion of total stablecoin supply. You just saw JP Morgan building into this. People are calling it a scam. It's like, what's the scam? The price is not lining up, but I've seen great companies not do that. I don't think Nvidia's doing that right now. SoFi at $6 wasn't doing that. What happened to SoFi's price? If I can bring this up, hold on. If I can bring this up and look at SoFi's price over time, is this what their business looked like? If you go ahead and you look at their members over time, their revenue over time, their margins over time, all those just look up and to the right, just slow, incremental, not even slow, but like 20, 30% growth rates over time, just climbing up and to the right. But yet sentiment on this company has changed so much, where it immediately ran up to 20, completely sold off down to $4 a share. Did the company, was it worth 20% of what it was worth previously? No, of course not. And then back up. So sentiment can change, but the fundamentals they don't trade one-to-one. Okay. And I think that you're seeing that on Ethereum. You're having a mixed base of, okay, there is real activity happening. We can see that in the stablecoin usage and the tokenization of assets and prediction markets and all of these things where people are finding real use cases. And then on the other hand, you have people speculating, okay, well, maybe it's not all going to be done on Ethereum, so maybe I should start selling it off now because Solana is starting to pick up some pace, or some other chain is starting to do very well. That's exactly what's happening with, Broadcom versus Nvidia. This is just like, it's not that Broadcom's actually picking up that much of a market share right now in the data center space versus Nvidia, but people are worried about the future, so they, trade the companies forward looking. They'll sell Nvidia today to buy the next winner, not because they're winning today, but because they might win 5 years from now. Now, Tom Lee got the price wrong on Ethereum. That's for dang sure. But this is also why, I'm not a super believer in the technicals and all of these things. You guys don't see me drawing lines and charts and everything like this, because sometimes those lines can deceive you. They clearly have deceived Tom Lee. I'm not happy that Ethereum has not skyrocketed higher during the time that I've held it. But also, like, I've known the risks, right? And until I see the fundamentals change, I'm just going to look at this like a dip buying opportunity. But yeah, we're below 3,000 again. It's not the place that I thought we would be end of year. It's not the place Tom Lee thought we were going to be end of year. But it happens. People are going to dump prediction markets quick once they realize the rate mitigates their gains. I don't agree. I mean, they're one of the lowest take rates that you can find in the betting market space. And it's only going to go down from here. I think that people aren't going to dump prediction markets nearly as much as there's just going to be pricing adjustments. You look at E-Trade whenever they first came out, or even before that, whenever you used to call up your broker, $100 a trade, $50 a trade, $25 a trade. E-Trade came out, I think it was $15. Companies started to come out offering $10 a trade, $5 a trade, and then Robinhood came out, free commission. So, or zero commission trading. I think that's going to happen on prediction markets. That people are just going to say, okay, well, I'll offer it for cheaper. Robinhood's going to build one in-house and do exactly what they've done in every market, which is just to bring the prices down. I honestly think prediction markets are going to have a unbelievable spike in two things. One, volume overall. I think that it's almost like buying an option with extremely clear and easy to understand rules. X has to happen, and that's what's going to allow your payout. Can you complicate it with additional plays and options and parlays and spreads and all of these things? Yes, all that's going to be built on, but for the most part, it'll be easy binary. Binary meaning yes or no, did this option complete, with the ability for you to sell along the way to sort of bet on where that sentiment is that day. Okay. The next thing that I think is going to happen, people go, oh, well, you know what? This is just a big market for insider trading. And I agree with you guys today, but that could be said about the equity markets. Then rules are put in place to say, hey, if we catch you guys pre-trading on announcements that you guys are going to make, we're going to jail you. That needs to happen on prediction markets. We just need a simple rule. It's not like, oh, they will never be able to find me insider trading. Yeah, right. Okay. Crypto, one of the amazing parts about crypto is how transparent it is. There's ways around it. I'm not saying that there isn't options, but prediction markets are not built on Tornado Cash. Okay, they're built on Ethereum and like whatever. Ethereum and Solana and stuff like this. But insider trading just needs to be, hey, you guys cannot do this anymore. You guys can't trade on a certain thing and then have a direct effect on that outlook. That would stop it. Tesla fans should get some trip around the world. Tesla is looking up. There was a video that came out in, was it Austin? I have it saved here somewhere. Robotaxi spotted in Austin, Texas. Yeah. Completely no one in the passenger anywhere. Just driving. No one in it. And we all thought that this day wouldn't come, but we're here. It's here. It's official. Now we just need to popularize it. And sometimes I think markets have a hard time seeing how much progress is being made. But you go back 5 years and say, hey, there's cars on the road that no one is in. Maybe a little bit further than 5 years back, but it wouldn't even be, thinkable. Okay. Brian Armstrong was saying maybe we should allow insider trading. When did he say that? I'd like to know when he said that. Okay. Now they just need to not kill people on the road. Yeah, but I think the same thing with technology, right? It's just it's got the right parts. The time it takes to send a signal down to your hands after you've seen someone end up passing on the street and you need to dodge that incident, it's a long time. Computers can do that much, much faster. So already, computers have the upper edge on driving, but there's a lot of complexity. I think Waymo just, there was another day, I think it was yesterday, where it just drived into a marathon thing. It didn't they didn't really put pylons or whatever up. They just put caution tape on all the intersections that the marathon was happening. It just didn't look at that caution tape as being something that should stop the marathon, or stop the car. So, you heard it was fake news? Oh, okay. There's videos of it though. I mean, I don't know how that would even be faked. There's a video of a Waymo trying to get into a marathon. Here, wait. I'm not saying you're wrong. You could definitely be wrong. It was just passing on my feed, but yeah, it was this right here. Okay. Hold on. You tell me if this is fake. And this Waymo here was, potentially looking to turn in, and they had to put like a guy in front of the Waymo to just say like, hey, do not drive into these people. Maybe it's fake. Yeah, AI. Yeah. Chase always getting their advertising. This is the one good thing about brick and mortar. Chase is everywhere. Huh? Okay, so this was a little bit of fake news because they said that Waymo drove into a shootout. The guy was already on the ground, and the Waymo didn't go between the two people. But yeah, it did just drive into an active crime scene. But it wasn't a shootout. BM&R. Okay. Maybe they should try larger sensors. I'm not saying everything's ready today. I've seen anytime that there's like a you look at technology and I see what's the possibility here. The computers obviously can recognize things on the road. It knows what pylons are, it knows what people are, it knows what sidewalks are. Like, that's all proven. And we know that the sensors and lasers are much faster than human reaction. So with enough testing, with more GPUs, with the advancements that we always make with technology, do you think that they're going to be better drivers than humans in all situations? And I would say 100% yes. Do I know the timeline? No. Okay. And that's really the problem. But is full self-driving coming? It's without a doubt. Without a question. In my opinion. Okay. I'm taking my vacation in San Fran this week, and I've seen legitimately 40, 50 Waymo cars, the amount of Waymos I've seen. Dude, in San Fran, they're everywhere. You'll pull up to a place and there'll be like 4 parked along one like sidewalk. It was crazy whenever we got there, and I bet you there's more whenever I was there, or sorry, whenever you're there now versus whenever I was there last year. They only continue to build more of these. So the self-driving cars are taking in more data. That data is only going to allow for smarter advancements. And unlike humans, we've got some really, really good drivers and some, honestly, some people that need to get their license taken away from them tomorrow. They need to go robo-taxi today. Okay. But on the self-driving cars, quite different. When one Waymo learns a mistake, they all learn that mistake. I think that's pretty interesting as well. Okay. How many times does Waymo fall asleep behind the wheel or drink drive or look down to change the radio or look at something on their phones? It's true. However, I still think I might be a better driver in the snow or rain, but we'll see. As of today. But you're 100% correct. They're not getting sleepy. Okay. What else is in the big news today? How you guys doing? How is everyone doing? GM strikes deal to put Apple Music in all of its new vehicles. Cadillac and Chevrolet models starting this week are going to have native Apple Music. With streaming over OnStar, including with no additional data costs for 8 years on select Cadillacs getting Apple Spatial Audio. I don't care that much. Okay. Is Bitcoin and Ethereum still selling off? Oh, well, we hit a semi-bottom here on Ethereum, 85,100, now 86,100. ETH, is ETH looking the same? Little bit. 2,900. We are just stuck in this freaking range, eh? Just constantly back and forth and back and forth and back and forth. There might be a real sort of use case to say that the real winners of Ethereum are going to be the ones that own the user. I know I continue to say this, but like, I really think I'm right. You know, the big banks are going to be the beneficiaries. The companies that actually sell product are going to have lower, fees and faster time for payouts and small micro transactions and all of these things. They're all going to be massive winners for crypto. Is crypto going to be the one that actually wins? I personally think yes, but we'll see. Did I say 80,000 or 86,000 ETH? I meant Bitcoin. What's your reasoning, Tanner, on this exhausting market? I think mainly just the, we're going into sort of a new tech revolution, and people have extremely, are there wide ideas? Do people differ a lot, right? Costco, if you were to ask almost every single investor, is Costco going to make more money or less money 1 year from now? I bet 99.999% of people would say that they're going to make more money, right? Like Costco just continues to add on more users, sell more product, advance all the other value-added services, whether that's tire changes or insurance policies, helping with travel. Like, it's just such an amazing service. If you were to go to probably that same number of users and say, is, I don't know, OpenAI, or is like pick your AI name. Are they going to make more money this year versus next? Are they going to continue to grow? Maybe 1 year is not enough, but maybe, over a 5-year period, is Costco going to make more? Yes, definitely. Is OpenAI going to make more? There would be a lot of debate. And because the market's so split on that debate, you're seeing this extremely, hard to find market, like hard to accurately price where we put an Nvidia, where we put an Oracle, a Nebius, a Coreweave. What percentage of that audience that we're even asking what Costco does? What do they do for a business? Everyone could answer. How many people, whenever you're asking them what Coreweave does, can honestly answer you? And so that is hard to price, right? Complex businesses are not usually great for multiple. Like, Peter Lynch sort of brought that into perspective, right? Like that whole what's that speech that he ended up giving where he was talking about, how many exaflops, gigaflop, whatever, he was going on and on and on. And he said, like, if you get into a business like that, you're doomed, because you're going to come out with another company that has more flops, more exaflops, and they're going to beat out you, and you won't even know, you won't have the foggiest idea of what just happened. I think that's hard, right? For people to, 1, understand the industry, 2, agree on the outcome. Japan set to raise interest rates on the 18th or 19th may have ripple effects to the U.S. markets. I mean, maybe. I'm not doubting that, but I honestly think that this is just, how big is the AI industry? Is it worth taking out debt for? What are the real use cases? I think the problem is too, ChatGPT. I mean, we can go to ChatGPT right now. They probably still say it because I didn't take them up on it. One of the biggest, it does still say it here. Let me bring up my thing here. One of the biggest thing that got the .com bubble was looking more at KPIs and not looking at the actual fundamentals. So there were a lot of companies saying, we have these many users. We're not monetizing them today, but we will. Okay. But we have this many users. We have this much traffic. We have all this, but we don't know how to monetize them yet, but we'll figure it out. Okay. And I am a bull on ChatGPT, but now they're starting to say, hey, for a limited time, we'll give you a free month of ChatGPT Plus. So you don't have to pay the $20 USD. Come and give it a try. But the funny thing is, I've been a ChatGPT Plus user. They're trying to get me to re-sign up for free. And you don't give a lot of free promotions and stuff like this for a product that is selling at full capacity. Now, I'm not calling doomsday on ChatGPT, but there is some worries that all of the utilization of these chatbots and the constraints and everything are just being done by users that are not willing to pay for the product on a consumer side. You know, clearly they're going to get more. You're going to get more token allowance if you pay, and if you pay $200 per month. But a bunch of free users are not giving ChatGPT much other than training. So that can be. Yeah, Netflix doesn't discount. Yeah, that where's their Black Friday Netflix subscription? It doesn't happen. You know, Netflix is Netflix's price. Come and see our content. Not gonna lie, once you go pro, you can't go back. The reason why I was a well, not pro, but a plus, and then ended up going away from it was because Grok was really kicking off at the time. Now, boy, oh boy, do I have egg on my face. Grok is the absolute worst, and if I could short a company, it would be Grok. It's just the worst model of all time. I'll fight on any hill against this. That like, I love Elon. He's doing great things, but him saying like, "Oh, AGI is a couple of years away," and then I use it, and it's just the worst experience. I'm like, you guys are comfortably in last place. Anyway. I probably will end up just going with Gemini because the interesting part about it is their model is great right now. Maybe it ends up getting beaten out by ChatGPT or Grok later on as they continue to upgrade. But Gemini will just bundle with everything else that is in, the Google ecosystem, which just makes the payments so worth it for me. Hey, pay $20 a month, same as ChatGPT, but we'll also throw in cloud storage for you and YouTube Premium and Google Home Premium. And we'll throw in all these additional tools for your YouTube and your Google Sheets and your Google Workspace because you run a business. And it's like, okay, well, what are we talking about here? Yeah. What about Grok makes it the worst? I've done this thing multiple times. People, if you see them call me Lori in chat, or if you've seen the posts that I've made about Grok of, the pictures and stuff that it's created for me, it's absolutely garbage. The research side is good because they have real access to information the same way, or like from X, which is good if they source it properly. I've never had a problem with the links that they've sourced or the information that they've given me in real time. That is a strength for them. But if you can't even get the basic stuff done, then I lose. It loses credibility for me to be able to use it as like a main, daily rider. So it didn't know who I was. It doesn't source long context from any of our other conversations. That, by the way, is what ChatGPT does the best. And I think it's the most useful part about artificial intelligence is that over time it learns who you are, and then it continues to have more and more additional memory. And like that will be the most useful part about ChatGPT. You ask it a simple question. You don't need to be a prompt master setting up a 1,000-character prompt in order for you to understand everything that's happened before you ended up talking to this bot. It should be able to source what you've talked about it before and then build on those conversations. That's what makes good artificial intelligence, in my opinion. Gemini is going to be really good at that. ChatGPT is leading the way right now, in my opinion, for long context. A mistake. I had it linked to my X account and I asked it who I was, and it said that I was a pro bono attorney named Lori, and my X account was this. It just wasn't like it. I don't even know how it did that. And then I asked it who Anthony Noto was. It told me it was some Hispanic guy and drew me a picture of him and everything. It was just all wrong. I asked it to make me Jim Cramer, but Jim Cramer, which was nice and buff and, you know, big muscled and everything. And Gemini did it perfectly. ChatGPT did it perfectly. Grok made him have these big fat titties that we were laughing about on live, and it was really funny. So it's just awful at doing the basic stuff. But yeah. Like legitimately, I could probably find it because they usually save the images because they're really expensive to create. So they don't want you to recreate them. So they'll give you, you know, those images. But let me see if I can find it for you. Okay. But let's go ahead and take a look back at the market while I do that. And I'm just speaking from personal experience. And like I said, the actual research, you know, you can ask it, hey, what's going on in the markets today? It'll give you a nice, concise, here's the big things that are moving the market. Like it does well at sourcing X and giving you up-to-date information. Okay. Let's see what else. Oh wait, sorry. I was going to do that, but you guys were talking about. I saw a little thing of an acquisition. That's not true, right? SoFi acquiring a business? I didn't see this. No. Right? Am I right? Okay, how do I check my history for images on Grok? Do they have like one media thing? Yeah. Okay. Okay, I have it. I've got the Grok one. Now let me get the ChatGPT one and I'll show you guys the difference. Yeah, okay, that's good. So I asked ChatGPT to make me, and by the way, exact same prompt. And in fact, I actually made it worse for ChatGPT. I didn't give them a source image on the Grok one. You have to give it a source image because it won't go to the internet for it. So I said, hey, can you make me a buff Jim Cramer with his shirt ripped and he's got like sort of his arms out and his name would be Jim Cramer, like, you know, GYM, just for a funny internet joke. And this is what ChatGPT gave me, which I was like, okay, perfect. You know, that's fine. I like that. This is what Grok gave me. Sorry for your eyes, what you're about to see. What is that, dude? Look at his fingers. He's got like cysts and stuff on his fingers. He's got his titties out. Like, how? And the people go, are you sure? Like, Grok, like what makes you think that they're any worse than ChatGPT? That. If I ask, I think last time we did it with Grok, they actually did answer and who I was, but that was not the case for a while. But all right, let's go back to the markets. Regardless, I am an optimist, even for Grok. I think that they will get better. I'm not saying that it, you know, there's been a ton of leapfrog events in artificial intelligence. Grok can absolutely do that too. It's just this current model that we're on right now is not my favorite. PayPal is allowing you to enter into a chance to win $1 million in Bitcoin prizes if you end up trading cryptocurrency on the PayPal app. Whose crypto portfolio is built on PayPal? That's really interesting. DBS Bank now has $500 million of Ethereum. On-chain data shows Singapore's largest bank, DBS, received 2,000 Ethereum from Galaxy Digital today. They now hold an additional 158,770 ETH and 8,000 Bitcoin as well. JP Morgan's launching tokenized money market funds on Ethereum. We knew that. Yeah. Where is Nebius right now? It doesn't look like it's... Oh, Chime is taking an absolute butt kicking today. This is not a name that many of you guys follow, but has been really interesting for me to follow. I actually hold this name. I'm not going to hold it forever. It's a little bit of a sort of a 6-month trade. I think after Q1 is where I'm going to look to potentially exit, because I think Q1 is going to blow people away in terms of how much growth there actually was. Just because of the amount of tax refunds. Is an online digital bank. So for sort of a lower income, less affluent customer. But still, a lot of very interesting stuff from that business. Tanner, do you think that we see green market tomorrow? I've got no clue. I mean, after really deep red days in certain industries, I usually like to think that there's dip buyers coming in for names like Coreweave and Nebius that, are down 6%. I was able to buy some at 81 and then an additional buy at $80.89 or something like this. So I was coming in to purchase. Oh, just a reminder. Yeah, we have Robinhood's prediction markets video tomorrow. And then we have another one on Coinbase the day after. So Wednesday we've got a Coinbase one. Tomorrow we have a prediction markets one for Robinhood. I think they're both going to be about prediction markets essentially. But yeah, I flip a coin for me. I'm definitely not a great trader. I'm a great long-term investor. Super good at staying patient, in my opinion. If I were to give myself a pat on the back, it would be to not be freaking out. And need to get better with not buying every single company that I think is at a discount. I'm going to be selling, like, over this next week for, for people that can, like, if you saw what I was doing, I'm going to be trimming a lot of names, I think. And especially whenever AI is on a big, sort of discount right now, I'm going to be looking to take advantage of names like Nebius and SoFi even, maybe even Coinbase. I'm going to double up on those two sort of themes. One is going to be crypto. One is going to be artificial intelligence. There's going to be a lot of people that think that those are the two big bubbles and that I'm making a big mistake. But I have invested my whole life in disruptive innovation. And there's not a single thing that I've seen come out to support that, crypto and AI is not what's going to make the two biggest changes in the world. Yeah. It's not that I don't like Iren. I don't know the company well enough. I saw a couple of their contracts, like for that, what was the recent hyperscaler name that they just signed a big contract with? I didn't like the amount of money that they were going to make on it. It didn't look like the terms of the deal were very good. And I don't like whenever companies pivot from one industry and then take advantage of another. I really like investing in the companies that have been like sort of solely focused on one thing. It's obviously good for Iris Energy investors for that pivot, but I want the best of the best. And honestly, I think that Nebius could be that. Do you have any thoughts on Ripple, aka XRP, becoming a bank? No. No, I don't. They all pivoted. What did Nebius pivot from? What did Coreweave pivot from? I'd like to know. The best of the best data center developers are Amazon, Google, and Microsoft. Completely agree. And aside from Microsoft, I hold both of those names and actively buying more Amazon. Yeah. Nebius was rushing Google. Well, the team was rushing Google. Yeah. But the main team, like the first, however unbelievable amount of customers, all came from the cloud space. Like they were in this space even before. But that was more of a political. Yeah, no, Yandex was, the pivot, but that's not a pivot like Nebius has been around, Obviously, they have been multiple things, but I'm talking about more of the coming from the like crypto mining space, whatever, in order to take advantage of the hot market. Coreweave was a crypto miner? Atlantic Crypto Corporation? Oh, I actually didn't know that. Nebius wasn't in crypto mining, though. To my understanding, they were not. That was Yandex, and then they ended up becoming or leaving there for political reasons, and stuff like this. But the reason why, and by the way, I don't even hold Coreweave, but the reason why I do like Coreweave is that they have the full support of Nvidia, and Nvidia also holds Nebius as well in like as an equity stake, but not nearly the size of Coreweave. Like they're literally backstopping their orders, like if they can't find customers, Nvidia will be that customer. That's pretty exciting. You ever held leverage ever? Never, ever. No, because times like this is whenever like, and this is not really to the margin decision, but people can have leaps and everything and then continue to hold them. And if you end up timing it wrong and near the expiry of those leaps, if you haven't already sold them, something ends up happening. We end up going into, a bad market. Some war ends up breaking out. Like black swan events happen all the time. So I like selling options. But yeah. Yeah, Nebius is not only data centers as well. Completely agree. I'm the most leveraged I've ever been. I have $1,000 of free leverage given by Robinhood. There you go. There you go. Yeah, they'll give you $1,000. They'll give all you guys $1,000. Well, Robinhood Gold users, they'll give $1,000 too. Yeah. Yeah, they're all old cloud guys. When do you feel like it's time to sell options to profit? I don't know if I'm the best one to tell you that. Black swan events happen all the time is an oxymoron. No, it's not. Black swan event does not mean that it happens like not often. It means that it happens without someone knowing. So it's the oxymoron there would be to say, I know when a black swan event is going to happen. Black swan event does not mean it's going to happen not regularly. Black swan events do happen all the time. Like all the time. You can have one of a terroristic event, a war, a terrible bond sale, a ballooning of a certain economy that goes way past expectations. Like, they really do happen all the time. But we don't know when they're going to happen. And we don't, like, yeah. Liberation Day was a very broad one. Guys, Black Swan, at least to my understanding, is a Black Swan is a very unpredictable event. A white swan is a very predictable event. That's it. That's all that means. I'm not talking about the size or magnitude of it, but I'm pretty sure just to the meaning of it just means that it's you can't predict it. Do you sell covered calls? Yes. When Nvidia 250, I mean, bro, I wish it was now. I'd like to say that after Q4 and we get some more commentary from Jensen Huang talking about 2026 and all the customers that have not slowed down and the new benefits that we're seeing and the healthcare research and all of this stuff that ends up coming out, that we end up ballooning in a multiple. However, at a 44 times PE, is there still lower to go? Of course. We could, Nvidia could be growing at 65+%, 75% gross margin and a 30 PE. Like, there's more contraction always, or more compression always. You can always go lower. So I couldn't tell you. However, I do like the fact that we've sort of sat in this space here. We'd actually need to start seeing bad news, in my opinion, for us to start heading even lower. To get back into the 150s and stuff like this, I think we'd actually need to see problems. And so if the market is comfortable with this valuation, maybe they're not comfortable with it, but they've definitely balanced out at this valuation. Every single quarter that ends up growing the business by 60+% year over year rates, and like even on a quarterly basis, like just quarter over quarter changes, like 15% increase. That's how much the stock should move in order to keep that same multiple, assuming that your take rate on that revenue stays the same, like the margins stay the same. But the margins look to be improving next quarter, right? So I feel confident that in the Nvidia trade, it's by far my biggest position. But yeah. Oh, sorry, one sec. I'm getting text messages here. Okay. My girlfriend's phenomenal. She's the best. Okay. I think we should go back to Nebius. Way too interesting. Yeah, I mean, Nvidia is cool too. We're definitely up there on the. Do you ever cash up, or are you always buying? No, I've been a cash holder in my days, just not right now. I'm like, whenever the market's bearish and I'm not, I stay in sort of a lack of cash. So whenever I originally went full-time on YouTube, I ended up selling my book of business as a financial advisor, which gave me a little bit of a cash influx. And so I had a little bit of cash during that moment, which probably, I don't know. Was that a year and a half ago? A little less than a year and a half ago? But got rid of that cash pretty quickly to buy things that I thought were cheap. And I think now I'm going to find myself with a little bit of cash because there's a couple names in my portfolio that I'm just like not super. And it's not that I don't believe in them, but I think it's an idea of sell your cheap names for even cheaper names. Okay. And that does not mean go down from growth to value stocks. Like just buy the cheaper names. I don't mean that in market value, enterprise value, or multiples. What I mean is like the reasonable price to pay for the growth to the multiple. Okay. So like a real valuation of, okay, well, what do I think Nvidia's worth based on 60+% growing, total addressable markets young, growing at 50+%, re-entering catalysts for China, and you know, every competitor is a generation away. And all the things that I see, the pricing power, all the advantages, the markets that they could enter, everything. Versus a PayPal, which is way cheaper on a multiples perspective, but the total addressable market is like they're losing share. They don't have pricing power. There's buybacks, but those buybacks aren't working. Do the buybacks signal that they don't know what to do with that cash? Is there any innovation? How long can this industry stand if they're not buying back stock? Like there's a way to value two different businesses in my portfolio. And I just realized that I don't want to be in that space of trying to time PayPal, because the longer time goes on and they end up losing and losing and losing on market share, it makes the timing of my exit more important. And I don't want to be responsible for the timing of my investments. Okay, Nvidia is growing, and whenever you're buying growth companies, especially hyper growth businesses, like we're talking Nvidias and the Nebiuses and stuff like this, the longer we wait, as long as the industry stays in that trajectory, the easier it is for that risk to be priced out and for me to, you know, have to worry less about my original cost basis. Because every quarter I wait on Nvidia, revenue increases, the multiple or the net income goes up, they buy back more stock, they do a lot of great things. So I actually find that right now, Nvidia is cheaper than PayPal. But I also am very concentrated in Nvidia. So I'm going to look for another name, and that's probably going to be Nebius. The growth that Nebius is seeing is so unbelievable. Like even on a quarter over quarter perspective, like it's insane. You're growing at like 50+% rates, 30+% rates, quarter over quarter. Whenever you start to think of it as expensive, you're like, okay, it's expensive until you look 3 quarters out, and then it's cheap again. But yeah. Nvidia will own loads of future growth stocks. Jensen may become the world's best investor. I mean, that was Google for a long time. The great thing about being in the technology space, even all the big names like Microsoft, like that's the original technology company, essentially. I mean, there were a couple, like you could have bet on IBM and got it wrong, I guess. But the good thing about the fast-moving ones, as long as you continue to reiterate them or re-underwrite them, is that they'll know what's working. They buy into the companies that are also working. They support those companies, strategic partnerships. They can have some pretty amazing investment arms because they see those companies growing early on and they know what to look for. So Nvidia is kind of doing that as well. They just acquired a company today, by the way. Nvidia. Google, SpaceX, and Anthropic investments will pay off heavily. Well, the SpaceX investments, yeah, have paid off in stride. Google is also in ASTS. Oh, I didn't know that. Do you like Axon? I do like Axon, but they might end up getting the chop because it's, well, I think it's cool. It's a cool name. Is it cheaper than the other names that I hold? And the answer is no. it still is a very interesting name. It's growing very fast. I'm getting a nice discount off this recent sell-off. You know, I think the total addressable market's going to continue to grow, but there's just easier to understand businesses at much cheaper valuations. It would be like buying Palantir here for me. I'm not anti-Palantir, but the price versus the risk is just not there. I would not own Palantir. I did buy more Nebius today, yeah. Also, a lot of people didn't like the fact my rankings of fintech stocks, you know, I had Nubank in like B tier. And everyone's like, how could this possibly be in B tier? Like I said, if I was doing my favorite tier list for like, these are the best fintechs over the next 10 years, Nubank would be in S tier along with Robinhood and SoFi, and that's it. Okay. And even, yeah, anyway. However, for 2026, there are some names like why I was fighting for D-Local to be so much higher is that they have just been getting their butt kicked. Like the multiple on D-Local is so disgusting for growing so much faster than Nubank. Are they as defensible? You know, there's some conversation for this, but like their market cap is $4 billion. They're growing at insane rates. They're going completely international. Payments is at a really weird space though, but I honestly think that this stock has potential to like double in a year. Nubank, I do not think is going to double in a year, but it will comfortably outperform the S&P 500 every single year. So while I'm a believer in Nubank, if you were to ask me, hey, would I trade Nvidia here? No. Would I buy it for just continuous outperformance? Yes. And if I was creating a Warren Buffett-esque portfolio, which I'm doing for myself, not saying I'm going to see his returns, but like long-term thinking, you know, patient investor, Nubank is in my portfolio. It's in my top 5 stocks. Nubank is. So I love them. But the reason why it was B tier is that in an individual year, I think that there's going to be other names that outperform them. Owning Nebius or Coreweave over Palantir is insane. I think owning a company for 430 PE and growing 1/10 or 1/12 the speed of Nebius is not that insane. If we really get down to brass tacks, I love Palantir. I think they'll be around forever. Okay. Or at least a long time. But it is expensive here. The valuation is crazy. You can make fun of PE ratio. Go to a PEG ratio. Tell me who the lowest person with the lowest estimate of Palantir's price to earnings growth ratio. You pick your year, 1, 2, 3, 5-year PEG ratio, whatever. And you guys tell me which valuation you guys like on Palantir. I mean, you can't tell me another company that has done well, that has had that type of valuation ever in history. Which company? You know, it is a insane price to pay. And what you're paying for is the sustained growth. Even Tesla's PEG ratio is lower than Palantir's. Okay. Yet Amit won't sell a single share. No, but that's fine. He's held for an extremely long period of time and he doesn't need a reason to sell. I don't even think that if you're holding it that you need to sell it. I'm not calling for a sell rating. But people are saying, oh, you're buying this stock over Palantir. It's like, dude, I would not buy Palantir here. I'm going to start my position at 190 or wherever it's at. 189. Sorry, I think I might be a little dyslexic. 186. It's a 433 PE. It is expensive. And I'm not one of these people that's bashing the whole business. I love Alex Karp. You know, that whole, even the whole neurodivergent fund and everything, supporting all those people. I've been very adamant. Like, I think Sam Altman, Elon Musk, Alex Karp, Mark Zuckerberg, like some of the smartest people, they're all neurodivergent. They're all a little wacky, you know? I've got no problems with who or the way that he acts or anything like this. I'm sure it's his superpower. But his superpower is also getting people to buy his company at 200 PE forward PE. Next 12 months, 200 forward PE. What's BM&R's PE? All right, you got me. You got me. But let's compare BM&R's book value to Palantir's book value. I'm talking about what their strength is. Would you prefer I talk about price to sales? Like, what metric would you want me to compare your, like, what is Palantir's metric? Is it their growth rate? Let's go to their growth rate. They're growing at 62.8% as of last quarter, which is phenomenal. Nvidia is growing at 62.5% and still expected to accelerate that next quarter. And they're 1/10 the cost. The rule of 40 is what I hear most about. Okay. Rule of 40 for Palantir is, let me get it. It's 128, something like that, right? What's the rule of 40? $113? Yeah, and what's Nvidia's? What's Nvidia's? I'm pretty sure it's even higher. Well, yeah, 120. Sorry, I was wrong. Palantir's is 114. Nvidia's is 128. So what are we talking about? You can get it for 1/10 the cost. Remember Amazon's insane PE early 2000s? Yeah, and then they never got to that price for 9 more years. Nvidia or Amazon was down on their price for 9 years before they hit that price again. From 2000 to 2009, they never hit a new high. Let's see how well my memory is serving me. So $5.65 in December of 1999. $5.65. When was the next time that they hit that? Right around, so they didn't hit $5.65 there. $5.65 was hit here, October of 2009. I was bang on my memory there. That was 9 years later. And that was your comparison to Palantir. That was your comparison, not mine. Yours. By the way, Nebius's rule of 40 is like 717 or 19. Yeah. But that's, yeah, I mean, that's, Tanner, you can't put a price tag on Palantir's ontology. I guarantee you can. I guarantee you can. You can't put a price on this guy. This is a priceless business. If it's a business and it makes profit, you can put a price on it. There's a price for everything. Can we talk about Nubank long-term looking to diversify into fintech? They're the Latin American super app. They offer everything. Okay. Yeah, it's got, you can't put a price on love. All right, that's true. That's true. So if you love Palantir, then that's fine. Palantir's margins are bigger than Amazon's. Yep. I'll let you guys decide on which company you guys want to compare Palantir to in history. You know, we don't have to come to an answer just yet. And also, if you were to say, Tanner, which company is going to have a cycle? You know, is it going to be the build out of Nvidia, or is it going to be the software contracts of Palantir? I would say, no, dude, I'm worried about Nvidia. Like, Nvidia is going to have a big build out, and then they're going to go right into maintenance mode. And Palantir can continue to sell and sell and sell the same way that Salesforce has done. There was never a Palantir. It's a unicorn. The famous last words of every internet company that has come before it. Tesla in 2022. So should we sell our Palantir? I'm not saying, like, no. Let's jump into what's hot and what's not. FG Nexus up 5.4%. But the biggest mover of the day, which we all love being the big mover, this is what we hate. The VIX, the volatility index, is up 5.5%, which means things are moving a little spicy these days. Rivian up 4.9%. That's also quite exciting. They've had quite the month, up 28% on Rivian. Tesla up 3.9%. Carnival Cruise is up. Silver is up. Norwegian Cruise, Eli Lilly, Bookings.com, even AppLovin. Wow. And I mean, hey, you guys can listen to all the jargon that I have to say, but Palantir's up, baby, up 1.4%. Just keep sprinting. And honestly, I would have sold a long time ago. So you guys are right. I'm the wrong one. But I just can't add here. It's too expensive for me. Apple is reportedly preparing to bring support for car key features for Toyota vehicles. I love that. I love that. Let's get rid of all wallets. Let's have everything on our phone and on our watch. So we can get in our cars. I can show the airport guy my passport or driver's license or whatever. I got my insurance. Let's have it all on Apple Wallet. I know I sound like I'm being sarcastic. I'm 100% believer. I mean, I don't even have my wallet on me right now, but let's get it gone. Lol, 1 point of failure. Yeah, no, but that's why you have the watch as well. You got to have the watch and the phone, and soon the glasses too. If I see my car, it should unlock. If I see my car and my car sees me, I get free entry. What if we're out of battery, Tanner? Walk home. Tanner, move to China, dude. I can't even get out of Canada. I'm not even in America yet. You know. Oh, what is weed stocks doing right now? Oh, wrong one. Canopy Growth Corporation down 3%. This the other day ended up jumping up 50+% on the idea of like a recategorization of the like category 3 for what's called cannabis, which I think is more along the lines of like a Tylenol 3 versus a heroin or something, which I think is where weed is, which I don't even smoke or participate, but to think that like cannabis and black tar heroin should be on the same thing, like, I don't know. None of my friends end up winding down at the end of the day with black tar heroin. None, not even one. But I definitely have some people that take gummies and go to bed. ServiceNow down 11.7%, TeraWulf down 11.2%, Gemini down 10%. It's crazy, man. Even like space companies can't take a break. Quantum companies are not taking a break. Yeah, Rumble down 8.5%. Why is Rumble down? What happened to Rumble? Is that just one that gets traded off? Is Rumble even a retail name? 8Co Holdings. Okay, let's go ahead and hear what Wall Street has to say about today's market. Okay. Let's have a little Lissy-Lou to Nvidia conversations here.
Over in China, reporting that Nvidia may increase H200 chip output because of robust demand over in China. Sounds like everything's fine for AI demand. Christina Partsenevelis has more in Tech Check. Hi, Christina.
Yeah, everything's fine. Back to you. But let's talk about that. Nvidia evaluating adding H200 production after Chinese orders, according to Reuters, exceeded current output. But there are two big questions. Can they actually manufacture more? And will China even buy them? On the manufacturing side, the H200 uses an older manufacturing process than NVIDIA's newer Blackwell and Rubin chips. So there's less direct competition for capacity at TSMC. SemiAnalysis estimates NVIDIA sold 1 million H20 chips for China in 2024, while actually ramping newer chips from the Blackwell family without creating any bottlenecks. The H200 uses essentially the same manufacturing process as the H20. Again, that's the older chip for China. The argument is they did it before. Why not again? That's exactly what one source they told me when we were debating on this. But TSMC, though, is stretched thin. The foundry said in late November that supply is, quote, about 3 times short of AI-driven demand. So ramping H200 would mean shifting resources rather than easily scaling. If they can, though, Morgan Stanley put a note that they estimate every 1 million H200 units could bring TSMC $1.3 billion in foundry revenue, which means a lot of analyst estimates would have to go higher. The bigger question, though, is demand from China. Beijing hasn't greenlit H200 imports yet. They've held emergency meetings, and on December 10th, they launched a government procurement list approving only domestic suppliers like Huawei and Capricorn. Nvidia not included in that list. So with billions of dollars pouring into local alternatives, China may buy some H200 short term, but is clearly prioritizing self-reliance. Manufacturing more is possible at TSMC, but sustained demand from China is the real uncertainty, Kelly.
I can't even believe this, man. We're talking about NVIDIA considering H200 production ramp, okay? And the whole time they're talking about TSM. Talk about NVIDIA. Okay. There was a Dan Ives thing that I also wanted to see here, so let's just have a quick peek-see.
There's also a chance, he says, that it could hit a $3 trillion market cap by the end of that year. For more, let's bring him in. He's here on set with me. Dan Ives is Wedbush Global Head of Technology Research. Welcome.
Great to be here.
You could have picked an easier one, maybe Nvidia. Like, why Tesla to you? Is it still so clear for all the ups and downs, for the auto industry, for all of its ambitions? Everything they want to do is always delayed. Granted, the market cap, is still phenomenal. Why do you think why do you feel so strongly that 2026 will be a great year?
I think it's about autonomous. I mean, when it comes to physical AI, I think there's nothing better, when it comes to physical AI than Nvidia and Tesla. And I think this is going to be a golden chapter for Tesla.
Physical AI.
When it comes to robotaxis, when it comes to cyber cabs, volume production, true autonomous, and of course you look at robotics in terms of Optimus. I mean, Kelly, that's why I think we're looking at $2 trillion, ultimately probably a $3 trillion market cap by late 2026, early 2027. That's why it continues to be one of our top picks.
What's the so you think about a market cap that big, you say, okay, it's high multiple. I don't know what exactly the earnings look like. What are you anticipating on that front? And how does physical AI kind of feed directly into the earnings power it might have?
I mean, when I look out the next 3-4 years, I think earnings power is 4x, 5x. But because it's my view that when you think about not just the FSD piece, but in terms of true autonomous, it's going to change the whole margin profile. It changes the whole growth story. And I think just going forward for Tesla, the focus, it's okay, deliveries, they matter. Of course they matter. But in terms of the next few years, especially Musk now, wartime CEO, in terms of pay package, as that's already cemented, this is just the start. And they're also going to have an ownership of XAI. You look what's happened in SpaceX. I mean, I think we're now talking about this next AI chapter that's happened across the Musk ecosystem.
We had Dan Primack on last week, and he said, I basically asked him, or he said the question to ask is, why is SpaceX going public now? Do you think there's anything related to financial pressure on Tesla or Musk or anything like that? Or is it a political? Why would 2026 be the year for SpaceX?
I think the time's right. I mean, you could argue valuation, right? Does it approach $1 trillion? It's the same reason why does Anthropic or ultimately when you look at OpenAI and others. I mean, we're hitting at a point where it's only year 3 of an 8 to 10 year build out in terms of the AI revolution. And for the first time in 30 years, I mean, you've talked about this, US is ahead of China when it comes to tech, but SpaceX is an inflection point. I think it's important that it goes public. It's the right time. And look, we are in, I think, 2 more years in this tech bull market. And we're going to see more and more of these great private companies going public.
Won't SpaceX be, if you'll pardon the term, sexier than Tesla? In other words, right now, if you are a big fan of Elon Musk and everything he's doing in the future as described, this is the only public equity you can own for that story. Now, SpaceX could be the newer, younger thing on the block. What if investors go with that and thus remove some of the halo, right, the community effect around those who hold shares of Tesla and support its valuation just to have a piece of Musk?
Yeah, it's a great point. Look, I actually think it expands. I mean, to some extent, the ecosystem from SpaceX to Tesla and ultimately what's going to be the ownership of XAI. Because the reality is when you think about what's happening here, I mean, we're talking about the next 5, 10, 15 years. Musk at the centerpiece of it. But I think it speaks to when it comes to Tesla, that continues to be the best play because I think autonomous is worth $1 trillion alone. You think about Optimus in terms of true robotics. And as this all plays out, I think globally, I mean, they can own 70, 80% of the autonomous market, globally over the coming years.
I know you think that full self-driving penetration could be as high as 50%. In other words, half the people who buy a Tesla pay the extra money to have that option, which would be, as you say, a game changer for margins and for the stock. So that's part of what you're talking about is for those who own Teslas, they use this technology. The other part is the cyber cab, what's it called?
Yeah.
And how would you describe its position in this vis-a-vis Waymo, where Waymo also does quite well. The car's really expensive, regulatory and otherwise. What should we expect on the cyber cab front from Tesla?
Well, first, like FSD, you're going to go from penetration 15% to 50%, and I think it could even be higher. So from a margin perspective, that's going to be huge. Look, Waymo is going to be a rounding error relative to what Tesla's going to do. I think not just in the US, but I think globally. Look, it speaks to just how expensive those cars are, how they could scale. And I think when you think about autonomous and in terms of the roadmap, I mean, we would expect probably some sort of executive order, going into early next year, where I think it's going to clear in terms of the federal roadmap. I mean, more and more, you're going to go away from the states to federal. And that's going to be extremely important for Tesla in terms of where I think they could take robotaxi.
I don't know about all that. Do you guys think that at $100 a month, half the Tesla owners are going to sign up to sit in the back seat of their car? I mean, for some people, it's definitely worth it. I don't drive enough to nearly, you know, would want to pay that amount for FSD, especially that you can't even use like your phone or something like this. Like if I could get work done and it was a matter of, hey, you know, you can not have to worry about the road now and pay $100. I mean, yeah, maybe that might be the case, but pay $100 a month and you still have to pay attention to the road. What's the point? I'd literally just be bored. Do you even go outside? No, not really. Dude, my car insurance is so unbelievably low because they have me at like a granny status of like, I drive like 3,000 kilometers a year. Like, I mean, it's really, really low. I don't drive much. People are paying monthly subs to use their seat warmers in their BMW. I don't think that did that actually go through. I know that they floated that idea, but I thought there was big outrage and they canceled it. I didn't know that you were an environmentalist. I'm not. I like my house. I'm not like not using my car because of the environment. I'm using it, or I have nowhere to be. I've got everything I want is in front of me. And I'm over exaggerating, of course. Obviously, there are things to do. But what's a kilometer? I'm a Canadian. What would it be? But let's just say, 2,000 miles. There you go. Tanner's in his happy place. You guys don't understand how many, like, I am living my dream life. Like, I think about it sometimes. I have the most amazing girlfriend. I'm in an extremely good relationship. She has good family. I've got good family. There's small problems that arise and stuff like this, of course, but like I'm talking like what are the serious concerns? I really don't have any. I'm investing well and money's not an insane issue, and focused on my health, and things are not going wrong just yet in that area. So as long as I stay healthy and happy and I can buy the things I want, I'm good. She's a guy for sure. Look at all you guys saying, what the heck is a kilometer? Do you have a garden? We were trying to get into a garden, but no. No, honestly, I love my girlfriend, obviously, but she can't keep a houseplant alive. So, yeah. How big is your girlfriend's Adam's apple? Engagement soon? I don't know. I don't know. I'm too it's funny because if it was just me, like if I was just gentlemen, tell me if I'm right here. Are the guys with me on this? That like for me, nothing would change. I just continue about my day. I'm already happy. Honestly, I don't even spend my own money. She spends all the money. Like, I know that's like the trope, but like I didn't think it was going to be real. It totally is real. The only reason why we have new couches and new, dining tables and why she wants to get the cabinets repainted, or sorry, the cabinets redone, and why we just got the new room repainted. That's all her. Okay. And I love her. I was just talking about why I love her so much. And I'm like, this girl just wants to change things for the sake of changing things. But same thing with the marriage. If it was up to me, I mean, we're dating. Like, I mean, what, like, I'm not seeing anyone else. You're not seeing anyone else. Why do we have to change anything? But she wants a rock on her finger to tell her friends that, you know, she's not seeing other people. So I'm going to do that for her. But personally, for me, I don't really care. You guys will know that I'm happy based on my Instagram. If I'm posting on Instagram, I've got to prove to people how my life is going. And if I'm not posting on Instagram, I've got nothing to prove. And I haven't posted on Instagram since frickin' 2019. I don't care if anyone sees how I'm doing. I'm so happy in my house with my dog and my cat and my girlfriend. You know what? I should marry her just so I can say that she's my wife, because I always want to say that, but then, you know, people question it. But yeah, she is wifey. Don't ever say you don't care. I really don't. Like, to me, I've grown up young, and you know, my parents weren't divorced or anything, so it's not like, oh, you know, marriage means nothing to me or something like that. I'm not trying to say that, but I, like, myself and my girlfriend have agreed that we're going to be together forever. And why does the government need to be involved? I never understood it. It makes no sense to me. So yeah, we're doing it definitely out of tradition, but it's not something that I necessarily have like wrap my head around. My wife and I were together for 12 years before we got married, only got married when we wanted babies. Well, that might be a reason for us getting married too, because we have definitely been talking about babies a lot lately. So, you know, my girlfriend's 28. So, you know, she wants to make sure that she has time to have kids and to make sure that that's, you know, at a healthy and opportune time to do that and everything. So, we do want to have kids and everything. Yeah. I didn't always want kids, but now, like, now I think I really, really do. And I think I didn't want kids whenever I was more nervous about my future. But now that I feel very, you know, happy and settled, I'm like, okay, I want to shape something now. I want to tell my kid what's cool and what's not. Okay, and my dog's freaking out, so I think that my girlfriend just got home, so the conversation is officially over. I think for her, it's a lot of tradition, you know. Your kids won't get cool from you. They will get cool. That I'm hip and up to date. What do you mean you're live? She doesn't watch the podcast. Come on. She's not watching any of my content. Amit's going to marry his manager. You've heard it here first. Y'all are some weirdos, man. I was listening to all those comments. Like, is this your first time seeing a female? You guys are. But yeah, no, I'm pretty excited to see what a manager, and I truly mean manager. I'm not trying to make any comments, but like what that's going to do for his channel. Because I think for the most part, he's done that all single-handedly. Geez, I can't talk. And so to see some additional help with some of the stuff that he's working on and, getting bigger and bigger guests on his show and stuff, I can't wait. Actually, I'm pretty excited. I got banned from a Mits chat because I made a comment about them looking good together. I'm sure you said it that way too. I'm sure you didn't say it in a weird way that you got banned for. Speaking of kids, I have to go pick up my kid. John, you know what? I don't want to let you leave alone. I think we're going to have everyone leave all at the exact same time. Ladies and gentlemen, this has been fun. We're going to talk more about other large tech companies, Robinhood tomorrow, Coinbase the next. I still continue to be a big believer in AI and blockchain, and it's going to be a lot of repetition in that sort of field until I'm proven right, and we are very rich. And if that doesn't happen, well, let's not even put that into the zeitgeist, okay? I believe it. And we're going to continue to underwrite these positions until it becomes true, the same way that we've done for Tesla and Shopify and Nvidia and Zillow and SoFi and Robinhood and Nubank and all the other names. This is investing, ladies and gentlemen. Thank you all so much for watching. Really do appreciate your time. Subscribe if you want. Bye for now.